The new rules about private health insurance claims kicked in on April 1st. But what does it mean for you? Hi, I'm Natasha, and this is The Usual Place. Now, today I want to figure out how our individual coverage is affected by these changes. And if you're wondering why this is happening, the short version is that the Ministry of Health, or MOH, stepped in to regulate IP riders to curb rising private healthcare costs. Now, previously, you could add a rider plan to your IP to reduce your out-of-pocket expenses. Now, with the new changes, policyholders will have to fork out more for deductibles and co-payments, but the upside is that their IP riders are cheaper. Now, to help us understand the full impact of the changes, I have Mr. Eddy Cheong, CEO of Haven, an insurance advisory firm, and you have more than 20 years of experience in wealth management and financial planning. So, well, thank you for being here with us.
Thank you.
And next to you on the couch, we have Mr. Yip Hon Weng, who is no stranger to The Usual Place because this is your second time here. And just to introduce you again, you are the MP for Yio Chu Kang SMC and Deputy Chairperson for the Government Parliamentary Committee for Health. Let me just explain what that means. So it's basically one of several committees set up by the PAP to have its MPs look at legislation and programs of the various ministries, and then you'll give feedback on government policies. All right, so I got that correct?
You got it correct.
All right. So today we specifically want to talk about this whole change to the IP riders and the health care financing system. So Eddie, let's start with a quick recap. Can you walk us through the changes and what this means for someone with an IP rider?
Well, it all started in November last year. MOH announced changes to the IP riders. And I think the context is that with the rising costs and the buffet syndrome that's causing the healthcare costs to be rising, all right? So in November, there's two announcement by MOH on changes to IP that will be coming in 1st April, which is just yesterday. So the changes basically means that the new riders no longer is able to cover deductibles. Okay, maybe I'll just go back to the original version, the old version, the old riders. Old riders allows you to cover the deductibles. That means the deductible is basically 1,500 to 3,500, depending on the ward type. So if you have a full rider, the old rider, you can actually enjoy claims from the first dollar onwards. When you walk in the hospital, you can claim from first dollar. All right. And on top of that, the old rider allows you to have a lower co-payment structure. There's a cap in co-payment. Beyond the deductible, there's an amount that you need to pay, but there's a cap on it. The cap is $3,000. So because of all these very generous riders, it's actually causing people to claim more, over-servicing, buffet syndrome. We all heard that. But at the same time, premiums are rising. We also see that people in the older age group are giving up their riders, okay, when they most need it. So the announcement came to make the sweeping changes. Firstly, no more able to cover deductibles, meaning that you have to pay at least 1,500 to 3,500 when you walk into the hospital. Yep. Okay. At the same time, the co-payment cap is increased from 3,000 to 6,000. But what it means is that premiums can be lower by 30% or more.
Okay.
Yeah.
So there's this interesting term that you mentioned, buffet syndrome. Can you just quickly explain what that means?
Because the old riders allows you to cover everything. It's like today you walk in a buffet, right? You pay a fixed price. There's so much food before you. You typically don't eat just enough, right? You eat more than that. You try this, you try that, you try this, because it's all paid for. So in a way, the old riders is like that. Okay, you pay a fixed premium. I need to see the doctor, and then with a whole range of services they offer, I may just go for the best, go for
all
extra.
the different tests. You may not need certain tests, or you may not need certain drugs, but because it's within the insurance, it may be prescribed to you. And is that something that's good for you? Perhaps. But is it good for the system as a whole? Maybe not. Yeah.
So I want to get back, I'll get into it later about who actually is contributing to this buffet syndrome. Like I'm sure it's not just the policyholders, but Hong Weng, I want to touch basically because we passed April 1st already and the changes kicked in. What have you been hearing from your residents? I mean, since this was announced in November last year, are they worried about coverage or increased out-of-pocket amounts that they now have to pay for their bills? Which is what Eddie said, some people who are older now drop their riders.
Yeah. I've gotten several feedback from my residents, and in Yio Chu Kang itself, my residents are generally more senior, just by nature of the estate itself. So many of them are concerned because as you get older, you tend to seek medical services more, and many of them, they are concerned that, if I buy insurance, I get a IP, I pay for the rider, and if I need to exercise, I need to use it, I end up paying more because now my co-payment, I potentially may need to pay up to 6,000, and deductible I got to, if I want my at the top tier, right? If I go for the private kind of service, I need to pay 3,500. You know, that's going to cost a lot more. So I think when they do voice concerns to me, I think the most important thing is to really explain why this is so, because if you look at it, we do this so as what you say, to avoid this buffet syndrome. But in totality, you reduce the overall premium that they pay. So it's 30% less. So they have to ask themselves, you know, is this, they have to do their own calculations, you know, is this something that they want? What is the risk profile? You know, if you are healthy, you don't smoke, you don't drink, you don't have, you know, your family history is generally okay, do you really need absolute peace of mind, or some peace of mind is okay? You know, so these are some of the things that we try to explain to them on the ground. And perhaps you take things in totality, the premiums and whether they exercise the rider and all that. Is it cheaper and all that? They need to work it out. They need to have a conversation with their advisors, the insurance advisors, and come to a conclusion.
So, I mean, you mentioned this because you said that the out-of-pocket payments are now higher, but you pay less in premiums with the new plan, right?
Yes.
Will it really be lower?
Okay, this depends on really the utilization, all right? Because in typical cases, people don't go to hospital every year. Okay, maybe in 10 years you don't go to hospital. Okay, maybe 20 years. Okay, depending on age and health history and stuff like that. So if you think about it, if the rider gives you a 30% savings, okay, and if there's no medical needed for the next 10 years, you are actually saving quite a sizable amount. Okay.
So that when you go to the hospital, when you do go to the hospital.
And then when you do go, then you pay the extra $3,000 up to $3,000 and stuff like that. I think that can make sense. Okay. For most people. Of course, if a person is quite ill, you tend to see a hospital every other year, I think they will stick on to the old rider as much as they can because they will enjoy more. All right, but in most cases, people don't go hospital, don't be warded so often. Yeah. So yes, I think the premium savings can really offset what you will enjoy in terms of claims. Yeah.
So let's go back to the buffet syndrome, which is kind of why we're here in the first place, right? I mean, Health Minister Kang talked about this. Eddie, you've talked about it too in other places. So basically, it's policyholders over-consuming healthcare, and then it's like you said, Hong Weng, like they tag on other tests and treatments that the rider, because the rider now covers like used to cover everything. So it just feels like the whole system kind of incentivizes policyholders not to think about costs. So who's really at fault here? Eddie, you've seen all these claims. What do you think?
I think everybody play a part.
I agree.
In this.
I agree.
But if I were to put a finger, okay, how it all started, I think it has to do with the competition in the industry, because Singapore is a very small nation of 5-6 million policyholders, and we have 7 providers in this market, and insurance companies are trying to compete among each other to capture market share. So because of this desire to compete, the benefits become more attractive. Otherwise, I can't get the market share, right? So I think that's my perspective. Okay,
right.
The starting point is it could be the design of the plan. Okay, design of plan. If the design of plan, I think when the doctors look at the design, it's all covered. Well, maybe I can have some leeway. And as a consumer, because I want to be treated as fast as I can, as comfortably as I can.
Yeah.
All right. I'll just agree to it. So, but that was a starting point. But as it progresses, it becomes like it becomes a cycle.
Vicious cycle.
You can't unlock it, and that's where I think the ministry has to come in to just break it. Untie it.
But I think, if I understand MOH, it's also quite difficult for MOH to, in a way, prescribe too much. Because at the end of the day, this is, in a way, insurance companies, the additional, the IP and the riders, they are really providing from private sector services. So we don't want to, in a way, control too much. We let free market, do most of the work. But if there is a bit of distortion or if many Singaporeans are affected, I think MOH will need to come in to regulate.
I mean, I guess when people look at this, okay, maybe some people will see this, it's kind of like a willing seller, willing buyer situation. I'm okay to pay for the premium.
Exactly.
So what exactly does changing the rider or the financing models now fix actually? Like these changes, what exactly are they fixing?
I think I can answer
Yeah,
this.
sure.
I think one of the things that we notice for the rider, why the rider premiums are increasing faster than we call it the base plan, the foundation, the base plan and the rider. You notice that the rider premium is increasing much faster than the base plan. Actually, it doesn't make sense because the base plan is designed to cover 90% of your total bills.
This is the MediShield Life.
No, the IP plan.
IP plan, okay.
Okay, and then the rider is meant to cover the remaining 5%. But why would the remaining 5% cost more or equals to the plan that covers 90% of the base plan? All right, it's almost equal and some are higher. All right, and I think one of the observations is that most of the bills sizes are small ticket items. The 3,000, the 5,000, the 10,000.
Yeah.
Okay, and that's a result. The utilization of this rider, okay, becomes very heavy, okay, and therefore the premium has to escalate to support the claims on this rider, okay. So with the new move to take away the deductibles and co-deductibles, actually remove the amount of claims, the burden of claims on the rider, and that firstly it brings down premiums. It should also brings down the claims rate. Yeah, but what this means also is that we have our MediSave. Okay,
That's the first layer, right?
Our savings CPF MediSave.
Yep.
Okay, whatever that you can't cover, whatever that the MediSave can be used to offset some of the cost burden out of pocket. Okay, so you have to think of that. When you save the premiums, doesn't mean that you have to pay everything in cash. You can still rely on the CPF to support. Yeah.
So really, out of pocket can be zero for about 6 to 10 people who utilize the riders. Yeah.
I mean, I also want to ask, is it because doctors also anyhow charge? Because I mean, the IP rider now taking now that we're kind of like fixing it in a way, it will make patients more cost conscious. But should something be done about the way doctors bill patients?
I think they should. I wouldn't say a lot of doctors are doing this. Maybe a small percentage could be making use of the situation to perhaps prescribe certain tests or certain procedures that are not the norm. Yeah, so that could be. So I hope that with the new changes, this will cause such behavior to be lessened. Yeah.
The design of the plan has also create pressure to prevent overcharging. Of course, there will always be errant doctors. I think in the last few years, the ministry has taken to task some of these errant doctors. Okay, but the design of the IP plan, if you look at it, is to prevent overspending, overconsuming. Okay, so now we do have what I call the panel doctors, the non-panel doctors.
Yep.
Okay, so to be part of the panel doctors, the doctors have to abide by certain rules, the way they charge, the way they cost the system, the way they treat. Okay, so if the doctors want to be part of the panel, they need to agree. Okay, and therefore price can be more moderated. So there's a move towards that. Hopefully that should help to curb the over treating by the doctors.
I mean, I want to ask if you think that, because earlier, Eddie, you said that a lot of these claims are small ticket items, but now with like this option well, it's not really an option, but now more people have to be pay out of pocket, right? Do you think this will change behavior in a sense? Perhaps like they might resist going for treatment or like seeing the doctor. I mean,
Yeah, that could be a possible outcome, what we call under treatment. So because they have to pay a lot more in terms of co-payment now, they need to pay the deductible. So there could be residents who, because I don't want to fork out so much money, right? I don't go for the treatment, I don't claim from my IP and for my rider.
or they will say, I'll just wait it out for a little bit and see how long I can prolong
that
this.
is a possibility.
Yeah.
That's,
So is this concerning? I mean, of course it's concerning because if people are sick, they should get treatment, right?
So I think this is something that MOH will need to watch to make sure that when we tweak the policy, when we enhance the policy, there are no unintended consequences. And we need to make sure that, patients or residents who really need the service or the help or the medical, the medicine, etc., are not, on their own accord, not going for it.
I mean, Eddie, do you see people anyhow claiming for random things?
I think, I think that we heard of cases where some people may want to stay in a hospital so that their claims will be eligible, all right? They will try very hard to stay in the hospital, okay? Because if you don't stay in the hospital, maybe it's not claimable. Okay, so I think that people will try to beat the system, play the game,
But do you think with the new changes, there'll be less of such people or less people doing this?
Yes, definitely. I think firstly, the deductor, okay, with you having to pay first, okay, I think people are more careful, all right? But I think I also want to say that actually, if you're concerned about cost, there are also different ways to get treatment. Okay, you don't have to go to a private hospital. You don't have to go. You can go to the subsidized ward.
That's right.
You can walk in and be treated as a subsidized patient. Okay, and get all the tests done necessary. It may take longer because of the system, the waiting. Okay, but get it treated. Don't because I can't pay that. I need to pay 3,500. I just avoid it because it could become worse. It costs more in the future.
And I'm glad you brought that up because there is this concern, that the impact on the public healthcare system the public healthcare system might feel it a bit more now, perhaps because policyholders can actually go to public hospitals and to reduce the co-payment bill. I mean, can our public healthcare system cope? I think the percentage now is about 10% in private healthcare
And 90% in public.
So will our public hospitals be able to cope?
I think they are watching this very closely, which is also the reason why MOH is that there are lots of initiatives and policy moves to ensure that they are able to meet capacity, paying doctors, paying healthcare professionals well, getting more doctors to come into the system, building more hospitals, ensuring that they have good coverage of services, things like that. I think the ministry is constantly looking at some of these initiatives to make sure that we are able to cater to the Singapore population. Yeah.
And with the change and one of the things that the positive, I mean, one of the things about reducing the premiums of the private IP riders is to make it more affordable. Okay, I think the message, I think the whole intent also is that if you have the means you have the preference, you have the means, private is still possible. You can get this rider. Yeah, it's no longer so expensive. It's cheaper now. Okay, yes, you need to pay more a bit, but you have that access. Okay,
yeah.
So if you belong to this category, you can still go for the private. Okay, I think keeping your private riders is now more affordable than in the past. In those days, people had to give up or they downgrade. Yeah. So I think it's a good move. Yeah, at least there's a compromise there.
But the fact that people have to pay first now, okay, so there's the deductible and then the co-payment, might this make patients feel like there is this perception that healthcare is more expensive, do you think? And then I guess that goes back to the question of then will they be more prudent or more cautious about seeking healthcare treatment?
I think they'll be more cautious. They need to be more aware. They need to understand more. I mentioned earlier, I think this policy move will cause people to really think through, do I really need it? Do I really want, to go into a private hospital to seek treatment? Am I of the risk profile? If I don't go, if I'm healthy, I am unlikely to go into the hospital within the next X number of years. Do I really need a very expensive rider? So they have to do their own calculations. Yeah. And for public hospitals, I think there are also good reasons why we should seek services in the public hospital, because I think if you want a bit more in terms of holistic integrated care, I think the public hospital will have a lot of these services simply because there are so many different specialities and they're able to look at the patient more holistically in a way. So there are reasons why perhaps some residents may want to go to a public hospital. And many of the doctors there will also have been seeing lots of patients. So they are, in a way, much more experienced. They will have, in a way, done the volume of work. So there are good reasons why some residents may want to go to a public hospital to seek treatment.
I'm bringing up costs because, I think it was earlier this week that ST reported that medical cost inflation here is projected to hit a record high of 16.9% this year.
Yeah.
How much of it is actually structural? This inflation is structural versus behavioral? Yeah.
I think it's a mixture of both. Yeah, structural, I think we are trying to address it through policy moves like this. Behavioral, I think it's a matter of a bit more health literacy. How we advise people how they should look at insurance, what they should buy, they should not buy, things like that. Just to have a bit more awareness about the different products in the market today, the different services, and what you should do. And I think many of us, I won't say all, when we buy insurance, we don't really understand or go into the details to know what exactly you're paying for.
That's me.
Some of us.
I only found out this week. What exactly am I paying for?
Many of us.
Yeah. So a lot of literacy, a lot of awareness building needs to happen.
Do you agree?
Yes. I think if I look at, I think I did take a look at the report. Just glance over. So the medical inflation in Singapore is 16.9.
Yes.
The APAC, Asia Pacific, is 14%. Okay, so what my takeaway is this: is that structurally in the global scene, okay, medical inflation is actually rising. Okay, so it's not just Singapore; it's in the region in the world. Okay, but why is Singapore much higher than the rest? Okay, I think behavioral. Okay, because I think many countries do not have the kind of full coverage like we have medical insurance, right? So that could cause an increase. Yeah. But I think that if I look at the 16.9%, I think a large part, will be more structural. Because we are at this phase whereby there are a lot of advanced medicine, a lot of advanced medical treatment. You can use robotics, surgery to treat. There are many ways. There are different kind of drugs that you can actually prescribe for better clinical results. And the cost of hospitals, the land cost, the manpower cost, all increases. Okay, so I think a large part of this inflation, I think, attribute to that. Okay, but the behavioral part, so we are now solving the behavioral part. Maybe I don't have 100%, but a percentage we need to bring it down.
So, Hon Weng, I have to ask, do you think the current changes to the insurance plans are enough? And does this address the extreme competition between insurers, for example, that Eddy mentioned earlier? Or does there need to be more oversight of doctors? Because right now it seems like the changes really target consumers mainly.
Yeah, I think the current changes are welcome. I think we can do more, as what you say. Perhaps more transparency in terms of bill prices, more scrutiny over service standards by insurers, making sure that the sector is well regulated. Yeah, so I think certainly there are areas that the ministry can do more. But I hope that as we move along this journey, as a consumer, we can be a bit more aware of what we are buying into. And the ministry will look into how best to regulate the sector itself. Yeah.
Eddie, thoughts? Because this is your area. Like, do you want more regulation?
I think having having clarity, okay, on how to manage the cost will help, okay, and I totally agree that literacy is very important, because I think a lot of people, when it comes to insurance, not just about IP insurance, they'll just buy the biggest plan they can afford.
Yeah.
You know, okay. Well, since it's within my means, I'm still young. Okay, I go for the best. All right, but IP premiums increases over time, and the big increase actually comes from 40 plus to 50 plus. The jump could be from a few hundred to a few thousand. Okay, so that is where people begin to realize, do I really need it? What does it cover? And those things. Okay, so I think literacy is important. Regulation, I think regulation should come at a point whereby the system is in a fix. You couldn't get out of it. Okay, like what we are seeing right now. Okay, insurance companies are competing, increasing premiums, and giving more benefits, increase premium, more benefits, increase premium. It just spiral up.
Yeah.
Okay, you need to break the system. You need to tweak the system. All right, to normalize.
So what should I do now? Because I'm stuck on the original IP, IP with the rider plan. Should I just like insurance max out now? Insurance maxing right now? Or I mean, I guess someone watching this and then they're
Yes.
like, what's the first step I can do now that I've learned a little bit more about this?
Okay.
Then where do I go with this?
All right. I can answer that. Sure. You want to answer?
I just say speak to your advisor.
Okay.
Speak to your advisor. I think that there are some online like health information planners out there, health literacy planners out there that you can take a look and in a way assess what is your risk and what are the kind of services or products that you need to buy. Yeah.
Actually, I think coming from someone who has absolutely zero idea about insurance, I think the onus is also on us. Because I
It
think when
is.
you talk about financial agents and then they will tell you, because they're all looking at the plans, right?
Yeah.
I think sometimes it becomes a little bit jargon filled and
Yes.
then I get lost. But
Yes.
Eddie, what's your take
Yes.
on what we should do?
So we do, in our firm, we do have a structured way to guide our clients on this. Because I find that when we start looking at premium first in accessing, meaning that if you have a lot of money, you go for our best. Okay.
Yeah.
Or you go on what is available. Okay, that may not be the best way to start. So we approach by a needs-based approach. So typically we use a 5 steps approach to guide our clients. Firstly, ask ourselves, what is your healthcare expectation? What do you really want to? Where do you want to be rewarded? Okay. If the intent is to go to subsidize all the time, then MediShield Life is important. Is not
It's sufficient.
Yeah, you don't have to spend the extra
Yeah.
money for IP plans. You know, pay extra, you can save it for your retirement and so on and so forth. So understanding your healthcare expectation is number one. And then number 2, you have to balance with affordability. Yes, I want the best. Am I able to afford it?
That's right.
Okay. So how do I ascertain affordability? Okay, we look at what is the lifetime premium. I mean, in a lifetime, how much are you going to pay? Not just now, but in the future. This is where the CPF board, they have this health insurance planner,
Yeah.
wonderful plan, and it just started, I think, last year. Okay, whereby you can key in using a SingPass to estimate whether is your MediSave is able to pay for the plans, the MediSave portion. Okay, so number 2, find out the affordability. Number 3, after that, you decide whether you want to get a rider. Because a rider, as I mentioned, it is extra.
Yep.
Okay. So don't have to do physics to get a rider. Okay. You don't have a rider, your plan is still okay.
Yep.
Okay, but a rider does provide some extra benefits. It helps to lower the out-of-pocket expenses. Okay, which we will talk about. Okay, but these are out-of-pocket expenses. These are a small fraction of the entire bill. Okay, if you want to lower that, fine, you can go for it. If you have old rider, keep it, okay, until you find that it's too expensive. Then maybe now at least there's a new rider you consider. Another thing about the rider is this, we didn't talk too much about that. The rider actually gives extra cancer benefits that the IP plans has limitation on. So yes, beside out pocket, there's also a cancer benefit, okay, which is also a concern for some people. So number 3. Number 4 is, as what you mentioned, risk tolerance. Okay, your medical history. Do you foresee yourself seeing doctors very often? How frequent is it? Because for some people, they may have conditions whereby they need to see quite regular treatment, then in that case, I think you should keep a rider. Okay, because you cost more, but you tend to consume more.
Yeah.
Okay, so if you think, well, no need, I think I'm very healthy, I don't think I will need it, then, well, you can actually have that cost savings. Number five is more like a fringe, okay? It's like, okay, if you are young, well, maybe you want to give yourself options, okay? You can go for a better one first. But you have to be prepared that when you are nearing 50s, you have to really downgrade. And that is your mind. I'll enjoy first, but if at a certain age before retirement, I should review and downgrade. And if that's your plan, that's fine. So if you follow these 5 steps, I think that will bring a lot of clarity to how you think about IP and IP riders.
So I want to end off on this because we've focused on the consumer, but you've also mentioned a bit about insurers, because I think there are 7 insurers that offer IP plans, right? And as you said, there's extreme competition because everyone's like fighting for in a very small market. So do you think that there should be just fewer insurance providers?
I wanted to ask the question. So what is the ideal situation
for this type of
Singapore?
market? Yeah.
Okay, I don't know. Insurance company may
Like, hey, Eddie.
Yeah.
I mean, it's clearly, everyone's trying to outdo everyone with their
Yeah,
plans
yeah,
and everything.
yes,
So what's your take on, addressing extreme competition in this area of insurance?
Okay. I mean, I would think that firstly, to operate these IP plans, you need to have a very sustainable pool size. Okay, so I don't know what is a sustainable pool. I mean, the actual will probably have to know. Okay, but you imagine if, let's say, we have 5 million divided by 7. I mean, average is less than 1 million. Okay, so I think you should really have a sizable pool size. If I were to hazard a guess, maybe 4 or 5, that probably should be sufficient. Yeah, but really. It's a open market, right?
Yeah.
The insurers who is in this space have to find ways to capture and make it more sustainable for themselves and for the consumers.
Yeah.
Some form of consolidation.
Yeah.
Is this something that the GPC will ask for?
This is something that we'll keep a lookout for. Yeah.
All right. Yeah. On that note, Eddy Hon Weng, thank you very much for sharing your thoughts and for being here today. And that's it from the usual place. Now, if you're watching us on YouTube, do subscribe and hit the notification bell so that you won't miss new episodes of the podcast. Now, if you have thoughts on what we just discussed, do drop a comment on YouTube or talk to me on Instagram at The Usual Place Podcast. I'll see you next Thursday at noon.